Blockchain is definitely a fascinating topic, and everybody kind of keen in terms of knowing this new technology and as in to explore around and see what is going on in this world of blockchain. And it's always a interesting topic when it's coming to technology, and we see the presentation of technology in terms of the application. It is completely way different than what it is been promised. Um, so given this case, let's put into a context. So 86% of the leaders currently are looking some or other way to explore blockchain as a technology and apply um, into their application system. Out of that, 46% of the population or the projects on live are from financial services. However, only 15% of the projects are on some sort of live into the system. So what is the such a enthusiasm is like 86%, but whereas the real implementation is coming to a 15%, that makes a question that what is going on. So let's explore that aspect of what is the gap and why there is a problem, and how we can be vigilant and more proactive in order to capture that value and understand and dive into see that gap and analysis, like in terms of strategy. If you are an investor, you should know what kind of money you are putting into. If you are a startup person, you need to see what kind of value system you are putting your effort inside, so that it should not go away. And if you are even an enthusiastic person in terms of knowing the technology as in, so you need to understand what is the pitfalls around it and how you can leverage the best know-how practices. So here is the promise. I am giving 3 more key value in this session so that we can explore around what is the pitfall in the blockchain strategy, as in terms of with a reference of what is a real application system, a real business case, smart contract in legal agreement section in financial services. And we will look at these blockchain adaptation problems in financial service. What are the roadblocks? Because the same problem will be everywhere else. And we can leverage that particular aspect and understand it and explore around going forward. And of course, being a technology person, it's always an interesting factor to look much deep dive inside to see how it is exactly working inside, so inside out. So that's a little bit of deep dive we will do in terms of from the session to understand how this whole thing is working internally, how the contracts are being made, how the blockchains are being formed, and so on and so forth. Let's dive in. Just for introduction, this is Biswajit. I recently completed my executive MBA from iBrown program, and I also completed my graduation in computer science and master's in computer science. So I kind of more a technology guy who is doing a lot of technology strategy and transformation, and looking into this blockchain aspect as an out of exploration and curiosity. As I was explaining, this is one of the project, part of my supply chain project, and I did quite extensive research on this topic, and along with my friends in my team, and we came up with a lot of research and background that on this particular presentation is a snapshot of little bit what we did deep dive report did it. So hope it will be a kind of something insightful for you guys to take it in from there. So let's dive in. So running a bank is not easy. It's definitely expensive. So economic cost to run a bank is almost 90%. So you only get 10% profit out of all your revenue system. And if you see the spread wise, it is 62% of the revenue is going for operational cost in financial services. And you are just making capital charges are 18%, which you can't really avoid most of the time because of the complexity of the system. So you got completely 80% of your expenses, you are really tied up with certain things, which is very unflexible to remove. whereas your profit margin is very low in terms of the industry wise, you can say. So as I was mentioning, 46% of the blockchain projects are driven by the financial services, and the reality behind that one is that this operational cost is the main driver for them in order to reduce that operational cost, and how they can find out the capital charges if there is a potential to reduce, because you can't really get away from the taxes. Is highly regulated in the industry. So that's the reason, main driver why the 46% of the people in blockchain applications are in financial services. The next biggest next biggest industry who is interested in blockchain is manufacturing, and then healthcare. Healthcare even 10%. So you can see the huge kind of excitement in the financial services industry to leverage this blockchain as a solution, and a lot of activity and a lot of investment is there. So just to going to the industry, I just say that expenses part, just for a context to give and how big is this industry and how big this expenses is exactly. So financial services, just for a US market, the percentage of GDP is like 176, 207% of the GDP is fixed income. So with respect to the US GDP, that volume of business is happening in fixed income. The volume of business happening in equity business is almost 160% of the US GDP. So the scale of the market is quite huge. For 67% of the US economy funding are coming from the financial industry, directly from the capital market. And over 80% of the corporations, they are getting finance their strategy or their financial planning, they are getting from the funding from the debt capital, and only 20% is the lending. So the context is quite humongous, and the impact on this, any kind of a small changes could be a huge pivot to the industry. As we know that most of the US industries are raising capital, equity, and by almost 90% of the companies, they plan their growth strategy by raising capitals through the equity capital. And in terms of the bond market and equity market, over 100 trillion and over 75 trillion in equity. So this is the small snapshot over the industry, that how huge is this industry, and why this driver to save that cost is actually driving a lot of interest and enthusiasm towards this technology, something like blockchain. So given this context, this is for the US economy, kind of, because this is the biggest economy, and we can have can get a reference idea that how it is exactly going. But how long we have been in this blockchain, and how many successes have been happened. So there was a research done by the PwC, which says that like we have only 15% products are live in the sense they just reach to the point of publicity or the public announcement of the project and live. That is only 15%. So there is a huge amount of effort is going on. Somewhere in the down the road, they are finding out the pain and problem or discovering the solution. But unfortunately, so far with this current state, is only 15% are live. So that's really an interesting aspect, because you have such a big industry to disrupt, but certain things are holding you back. And what are the things holding you back? And we can explore that further, more deep dive. So to do that one, I just want to go through this value chain, because every business, if you see from the risk and return point of view, we have to understand what is the complexity of this business as a whole, what is the value chain of the system. For financial service, money itself is the product. So the inventory is of the product is inventory of system for the financial services, all driven for the money. We can think it as like supply chain of a money system. There are a lot of aspects and a lot of parties involved here. Right from this is more on the capital market context. So we have investors, we have custodians, we have CCP or central clearing houses, and we have asset management system, they all work together with different product and different facilities at a different capacity, and they are quietly very intricate system of the value chain. So when you are talking about the money supply chain of a money from one point A to point B, is just a kind of in an we extrapolate in a network perspective in a supply chain thinking. If you can put the mindset of supply chain thinking, it is the bullwhip effect, or the network complexity increases from one point to another point if there is some um, restriction or certain issues comes in within the flow, and that actually prevents your money flow or the product flow cycle to the next phase or next network iteration. And that is a risk. That's one of the major risks. Is a very inefficient system, but unfortunately a lot of financial services are tied up with that particular the current situation, or the current financial services as throughout the world. The way it is running is overly complicated, and a lot of players are there in this system. And blockchain is definitely, or the distributed ledger for that sake, could make a huge impact in terms of uh, providing the value to the system. So if you can see these two diagram, how distinct they are, how simplified the second version of the money flow or the value chain in the financial system could be could flow in, is quite intuitive, quite distinct. So just to put in, we use the word blockchain and distributed ledger often very interchangeably. The difference most likely you guys might be knowing. So every blockchain is a distributed ledger, but every distributed ledger is not a blockchain. So essentially, so what it makes difference to blockchain and distributed ledger, the logic to do the logics of all the storing of the data as a chain, as a block within the chain is there in the blockchain system. The data stored as part of the block chains, and conscious algorithms or these consciousness algorithms are all part of within that block. Whereas the distributed is much more, and the ledger is in multiple copies, same copies across the system. So because trust is the core value of the financial services, and here we are trying to address the trust issue. Because of the trust issue, there are so many players into the system and making it overcomplicated, because they set some aspect or certain viewpoint, they provide a level of trust which is essential between these two parties to do the trading. And that's how over the period, the system has grown up such a extent that is sometimes not able to imagine, meaning that's quite complex in flow. So, well, benefits, there are a lot many aspects of blockchains. You can see you can increase the trust. Automation is inbuilt, so that we don't have to rely on it. Is kind of more cloud native application, and we can transfer a lot of tools dependency from the infrastructure. Technical capability, definitely we will be in a cutting edge technology, and the more you have an experience with the technology, you have more advantage over other your competitor. Likewise, it goes in cost as an overall, the intermediary costs will be reduced, because definitely between the transaction between two parties, there are many applications involved or many system involved, like Swift, and you don't have to host a server, so that you don't have to pay money to maintain those servers from your pocket. Definitely it is a part of service. And you can, when the absence of intermediary, can explore a new segment of market, and you can think of different business model, and you can think of different pricing strategy, and you can make your business much more scalable in different aspect, which is current market is kind of holding you up. If you don't have to pay money to Swift in order to do a transfer, that money you can come up with something different plan, which is kind of untapping your potential in different aspects. So this session we can focus, this is more part of the question. We understood the industry, we understood the aspect, and we understood the cause which is driving the effect. But each legal agreement is that, so this discussion we are doing is for the legal agreement, because there is a problem, there is a solution. Let's look at it in a more context of business context, how it could be fit into the purpose, and let's analyze that particular business requirement and see whether blockchain is the really answer for this particular solution or this particular problem that we are looking to explore. And this is part of from experience and research, legal agreement, smart contract, and how there are many applications are live with the legal agreement, smart contract, particularly financial services, the blockchain application. Most of the people are talking about the legal agreement aspect. So why they are so interested about legal agreement? And when we are looking at the legal agreement, it's much more deep diving aspect than what we found and how we can explore. Like, so let's do a little bit of brainstorming on that legal agreement aspect. That why is that is fit for purpose for a blockchain, or the analysis purpose for this size for that argument. We can look at the scenario and we can see the solutions, what could be the potential solution using the blockchain we can get it, and what are the impediments are there, what are the risks are there in order to proceed with that one. And we can conclude that whether it is a right choice to select blockchain, part of the legal agreements automation. You have any questions? Feel free, we can be more interactive. There is not many people, so I'm open to.
So your use case is to look at blockchain as a substitute for general legal agreements. Is that your selected use case here?
Yeah, the selected use case is like, because the industry is so much complex, there are legal aspect is everywhere, because that is the core of the trust, foundation of the trust. As long as a legal agreement is between these two parties and they abide to that legal agreement, the whole value chain system in the financial services holds good. So there is always a driver to make that legal agreement between these two party or multi-party, make it much more visible and transparent across. And that's where the blockchain is a solution to apply that automation and apply that legal agreement saving into the blockchain and visible to the across all the party, so that they will know every point of time that I am working at what particular version of agreement, and am I abide with that agreement or not. So that's where I was diving into this business case, that okay, this is much more interesting because there are multiple parties involved and these are legal complexities are there. We have different regions, they have different requirement, different regulations are there. Maybe you are doing a trading today with maybe say China, and you are a US entity, your US entity is clearing a payment in China's business entity, and there are some trade war came in and certain restrictions are there on fund movement. Then your legal agreement is the point, it will come to save you, or you can provide that legal agreement in order to do the settlement or this payment out. So that those kind of interest would be saved when you have a legal agreement into the system, and it has to be.
So my understanding is that a smart contract. So a legal agreement is often implemented as a set of business rules into some type of transaction system. Right. So that there's a certain price, and then there's a certain pricing model, and then there are certain timeframes for the exchange of assets, and that there will be a normal settlement period, etc. So that might be a form of a exchange of an asset. How do we look at this from a smart contract point of view? What is a smart contract? And then based on what you define as a smart contract, how does a blockchain, which is often a record of the ownership of an asset, going to relate to a smart contract? So they feel like two different things, A smart contract then could be a set of logic, which is smart because it's adaptive. Maybe that's the reason it is called a smart contract. It's not a fixed contract. There's multiple variations. So it's a set of logic tree. Right. And then if the blockchain is defined as a certain record of ownership, then how are we substituting blockchain for a smart contract? Because then you got a decision tree, but you don't have an ownership. You're taking away ownership structure and you're going into a decision tree.
Right.
So they seem like mismatches of structures.
Right, definitely. Now that's the interesting aspect. So just if I may reiterate, so the legal part is always dynamic because
Okay.
legal aspect always changes from region to region, business to business, and product to product. However, that what is the state of particular agreement are not much always visible, because still in our industry practice is that even we are doing paper confirmation, so there is a set of paper is coming, somebody is signing it, that kind of practice is still there in financial services. So those dynamic rules, if it is changing very frequently, a smart contract program stored in blockchain executing those logic of what is the real state of the legal agreement,
I see. Okay.
would be a solution to the free up the value chain from the system.
Right. So the status of the actual transaction is saved on the blockchain.
Right.
And that is linked to a smart contract, which has got a set of different stages of execution.
Right.
And that might be involved with the actual ownership as well. So
Right.
it's a state of the transaction and the ownership of the asset based on the stage of the agreement between two parties.
Exactly. That's right.
Okay, that's interesting.
So that's why it becoming so interesting in the financial services. Everybody trying to do the automation, or they're trying to do a project in, at least in capital market system. Legal agreement is the first choice. Whatever the application has gone live, or most of them are legal agreement applications.
Okay,
so
very cool.
Let's dive in. So just to give an overall context that what is a legal agreement, any transaction between a bank or financial institute with their counterparty, or the people they represent, or the entities they represent part of their counterparty. So they can have multiple parties and other parties they involve across, and they can sign with an agreement. Say for example, is the agreement for to the swap and derivative product, or they want to do an FX kind of business with bank, and there are different product level, regional level, and aspect. There are agreements different covering those aspects. So bank and those counterparties, they all combine and they come together, agree to a particular set of transaction, a set of rules that they will abide. There are standards like ISDA is a standard, FX master is a standard, and there are sub standards and sub products, sub agreements attached to that particular main agreement, and that keeps driving the decision making aspect throughout the value chain. So in a more, if you uncover that one a bit more deeper, it looks like more or less like this. So we have counterparties on the right side. So we can have that could be another entity, and it can have a sub branch, it can have a main branch, it can have multiple branches. So for instance, we have so for in London, for example, there is a bank in London and there is a bank in Sydney, and they want to do transaction. Say for example, buying one investor is there who is interested to buy coal, and he's running a business through another entity or the business unit, and he is interacting with Sydney office in order to get a transaction to its counterparty in London office. So two different banks coming together, and they are representing different parties. So there is a multi-party combination, and they are doing a certain kind of transaction for payment. They may look at look at for the FX. They can do for the precious metal, or services, or any kind of commodities, or any business they do. They all have to abide with particular agreement upfront. There are exceptions are there. They can get into the transaction without an agreement, but the settlement of a transaction has to be must with an agreement. So that agreement has to be finalized state in order to proceed the confirmation process. So as you can see, they have each counterparty does a trading with other counterparty to the bank with their own respective account. Oops. So They maintain trading accounts, and those trading accounts from the bank side, they might be, is a multinational bank. They have a branch in London and they have a branch in Germany and say Australia, Sydney. They could have also additional subsidiary branches. They can do the transaction business with them. So they all has to abide with certain agreement, and that is a dynamic aspect. Sometimes changes with the clauses and regulations and updates, amendments, and so on and so forth. So from the time of booking a deal to validation to transfer, settlement, and confirmation process, until that settlement and confirmation process, the last piece of in the value chain where it has to be a finalized contract, because the digital form of the contract has to be attached to the transaction as a part of reference. If you did a swap transaction between two parties, then you have to provide a particular, that is the agreement, that what are the terms and conditions under that particular settlement has been done. So this makes a lot of interesting use case for the because every aspect of this, for FX business or for swap, typical transactions, they all have to be abide by particular legal agreement contracts. So as looking at the complexity of that problem, you can see there are a lot of challenges within this legal agreement system, because till now the practices in industry, even though in banks, we are in 2020, many banks they use mainframe. Many banks they use paper-based confirmation, which is always ambiguous and which is error-prone. There are a lot many offline approvals also there, because they get into a transaction, get into the deal, but they cannot execute the final deal until they have that any sort of legal approvals has been done. And it is an upgrading process. So if sometimes it already happened in London time zone and it has not reflected in another time zone, then it might not be realized. It has to wait for the next day or whatever subsequent business day delay. So there are delay on those aspects. Manual processings are there. Of course, looking at the networking system, settlement part is always coming as we have to provide regulations, a snapshot of your transaction. We have to maintain intermediary detailed transaction, that what is their risk aspect, whether it should be clear that particular trade or not, or it has to be hold back, or it is insufficient and it has, or the contract itself has not been finalized, and then you have to hold the fund. A lot of aspect which is multiple players coming in there, because of course banking is all about trust, and it is legal agreement provides that particular trust aspect as of now. And you have a lot of regulatory requirement which is keep changing, and because the business, when it is in a global scale, every aspect of it is global, and it is ever evolving. There definitely portfolio risk is also there, because a particular trading book might be dealing with multiple clients with a different product combination, and maybe the risk for an FX product might not be the same for the 3-year swap product or bond or a long fixed income loan. So, however, they might be doing that trading on the same book. So that poses an threat for a portfolio overall risk point of view. That's always not been uncovered most of the time. Because of the manual processing, there are some restriction on the STP, straight through processing. So straight through processing is kind of already everything confirmed, then it comes in the trade and it can be clear it within the same cycle, and it doesn't have any manual interventions. So those kind of problems are not really, those kind of situations are not really possible, because the manual and risk and synchronization process with these activities on the legal agreement as a whole is always not been the same the case. There are always issues with a real problem, ambiguities. So these are the 7 key aspects which we can identify as part of the limitation for.
Can I ask a question?
Yes, sure.
Can I ask a question? Would it be possible for one bank to implement something without the other banks? Because is the problem also that there's a lack of coordination? So with the clearinghouse, at least there's a clearinghouse, you have an external party which holds risk and calculates margins, and the trade positions are all centrally managed, so that if there's a default, then you can roll back. But with this type of almost asymmetrical potential for moving forward, is the lack of coordination another barrier to adoption?
Definitely, that's also a problem with because the two parties are coming in for their transaction, but CCP might not have all the visibility. They only do most of the time they do the settlement on the point of availability of fund between the party, but there the real value processing or the confirmation process, exactly, it has to happen with the right agreement. And there is always a mismatch of the process activities between these parties. Like one bank and other bank might not have that synchronization, and that also is a threat for business. Yeah, definitely.
Okay, thanks.
So these are the challenges. Looking at those challenges, it looks like yes, maybe blockchain is a solution to the complexity and the manual details right now. As of now, we have in legal agreement space. So if that is a solution, let's see what is inside there. How does it work, so that we can have an understanding that, okay, instead of knowing that, okay, blockchain, but let's see how exactly, what is the driver, what is the structure, what is the logic, what is the place, and who is responsible for what aspect of that structure. So this is from a research, it's a system called Ekidin. Ekidin is a form of blockchain distributed ledger technology, which is 600 times more efficient than in terms of throughput than Ethereum's current blockchain system, 400 times less latency, and 1,000 times less costly than the Ethereum. So this is one of the latest framework. In 2019, they have published their research, and they kind of explain the overall how it is work, the blockchain structures, and my research base was from there. And the most of the things are in terms of it is much common in across the all blockchain life cycle actually. So we have a data layer. Data layer is like all holding all the chronological records in sequence in the chain structure. We have a network layer that is responsible for driving the network infrastructure components. We have a consensus layer. That layer actually having the right mining right. So this is what exactly makes a blockchain a blockchain. Then we have a in the contract core layer, actually these three: network, consensus layer, and the contract layer, which is contract layer is the automatic smart contract execution algorithm sits inside that one that decides that whether this particular new record is supposed to be amended, or is valid enough, or the transaction is to be captured or not, or that kind of logic detail are controlled at the consensus layer and contract layer. Then we have the application layer, where your mobile phone or whatever the web or whatever the system the people providing the services in terms of interacting the service, the application as a whole. And that Ekidin architecture is actually is very interesting the way, because it isolates the execution or the trusted execution environment is where that exact transaction of consensus layer transactions are done. That has been separated out, and it can be tested independently, so that we can find out the limitations of the system as a whole, as a technology, that this trusted execution environment in this particular architecture, Ekidin. By the way, Ekidin is actually a Japanese term, which stands for long distance relay running. So they kind of adopt that framework to coin this particular architecture. And what did they found out, the sequence of the process from the client application to the node, to the core layer. Contract execution request from the client is received in the previous encrypted state contract. It just phases in the second term. You see there are 5 steps to this one, and each step responsible for certain particular task. And the last state we have a subtask of each other, so they're kind of more offsetting each other, complementing each other's execution. So the key management essentially done at the stage 3, which is essentially performing a key management on the contract and gets an state and an input, which is the new transaction is coming in. It has to be accepted. That validation logic is done there. Then it generates a new encryption state of the chain or the block. Once it is validated, and provides that particular calculation mechanism that determines whether that transaction will be valid and it will be accepted or not. And once it is verified and accepted, it creates a new block and amends to the blockchain. And the last state, it propagates that particular information to across the network, so that everybody, every else other node will be updated themselves with these latest amendments. This is the mining aspect of the blockchain happens, that they try to study and understand what are the limitations into that system, and they're exploring more details in that. This is a research from Cheng Raymond's this Echidan architectures aspect. But now coming to the fact that this is interesting, however, why this technology is such a promising, provides such a meaning, it seems to be a reasonable way to go ahead. However, the drawbacks are things which is, as of today, holding blockchain as a technology to be completely realized into the real application. Few of the aspects actually. The energy consumption is huge for a public blockchain, which is permissionless. The total Bitcoin's annual energy consumption is more than Switzerland's annual energy consumption. In US household, all the appliances, electrical appliances throughout the year, if you leave it running, what are the normal, like refrigerator, house lights, and all those stuff, which is always on applications, appliances, it can run the entire US population's utility can be run only 2.5 years, to less than 3 years essentially. So that's the huge, just for the blockchain network to run. And energy requirement is quite huge. And cost per transaction estimated to, it was like research on 2017 on this particular number. It might be more right now. That was almost $6 per transaction in permissionless blockchain network to validate a block. It is a quite may not be a big problem as of now, but if the adaptation is quite extensive, it can really move into a lot of problem. So that's one of the aspect. People are more skeptical when it's launching about blockchain as a solution. There are a few more problems are there with blockchain agent, because not everything that looks, not everything that science is gold. So there is very early stage in terms of the execution, or in terms of the maturity of that product agent. So as I was mentioning that 600 time Echidan architecture is efficient. It provides more throughput 600 times than that of the Ethereum model. However, they understood that at a point of time when they are reaching to the 5 blocks, a transaction per block is 5, and wait time is over 0.26 seconds, the throughput can reduce from 143 onwards. So it's like there is up to a 140 RPS, request per second, is fine. Once it is reaching 145 or something, the system actually started going to decline, and which is a performance deterioration. They did this analysis on the GSPN, Generalized Stochastic Parity Network nets. So this is a kind of this is a recent research on this academic. As I was saying, that is 2019 research, and it's quite latest one, and it is a 600 times efficient than that of the current Ethereum. So we can understand that Ethereum architecture or the blockchain is, the Bitcoin is much more older than the Ethereum, and they have framework way much more rudimental, I would say, or the old school, and still we have had problem when it's reaching to the number of the more network it increases, the performance subsequently started declining. And again, we have a problem with the data. This is a source from the bit info charts. You can see it's always live and they update all the detail. So the first block got created 2009 for instance, if you see Bitcoin, 2009, the first block created on January 2009. And the size of each block right now is 344.11 GB. That is one block in that whole blockchain network. And we have Ethereum, which is on 2015 started and is already reached 412 gig. And the size actually going enormous. So that makes, again, the consumption of the power and energy it is required, the consumption for the performance declinations also happens. It's not that much visible right now because the number of users and number of transactions are still relatively low. However, these statistics are much more concerning if you are really looking at the solution to a long-term scaling aspect of the. So that is something really has to be keep it in mind, because we design solution or strategy need to be mindful about how long sustainability how sustainable is the solution. And again, we do have problems with hacking. So like DAO is the Decentralized Autonomous Organization, which is trying, it's a European business entity, which is trying to democratize the blockchain application through applying Ethereum framework so that people can leverage the it in much more democratic way. And that got hacked in 2016, 50 million stolen. There was an initial coin offering project kickoff back in 2016, which actually the private key of that smart contract got hacked. And once it is hacked, actually they lost a lot of. They could not start. They could not do their IOC. That's also a threat, as an security threat, because it's so complex. And once it is broken, it's much more easy to break through the whole chain system. And MIT review, and there's an interesting article which critiques Ethereum's smart contract are full of holes. There are many loopholes are there in the system that are risk as part of, and you have to understand. We have to also consider that this is one of the live system, and this is one of the stable product that out there in the market, and they still have a lot of. This is true with any technology product, but the impact is a little bit higher here because it is direct transaction, direct money. There are other aspects also there, which is actually financial services struggle a lot in terms of the regulations. There are a lot many rules and regulation within the industry, as financial service as a whole is very regulated, and be it GDPR or what are the aspect of the business changes are coming in, technology moving ahead and regulation is holding it back. This is true in every aspect, and it's much more true for the technology, something like blockchain. Security is also, and scalability is also a little bit of concern here. The reason because you break one node, you break the whole chain. And it is not like it not happened. It already happened in this historically in the system. And the public cloud network right now, most of the networks are based on EDSA algorithm. Though it is much more secure algorithm, but if it is broken, maybe a supercomputer in future time, 10-year time, then it will make none of the security framework will not hold any strength in front of that. That include the blockchain as well. So if you are building an application for a futuristic way, then you have to also look into the consideration that what could be the vulnerability in the technology. We also have problem with the patent war. Being a new technology, everybody trying to hold their own right into that framework, and that is where it gets messy. For example, Goldman Sachs and Aarti Consortium, they had a problem with filing a contract on the kind of way it is supposed to work for the blockchain product should behave, and they had a conflict in interest, and they file each other patent war. So that is not very uncommon in this industry, because everybody want to get a early adapter and early framework defined, so that other else will follow them. Rest anyone is coming into the system, they should follow their way of patent. So that is a patent war is quite prominent in blockchain stress. Ecosystem complexity, definitely, because it's not like if a company want to do a blockchain solution and it come to the market and say that I have a solution and you can buy it. It's not like any other product, because it's more or less a collaboration platform where everybody else has to contribute their part of the thing. So for instance, the bank want to do a legal agreement automation, they need a law firm to work with them, so that could be as a viable solution. And they also need additional third party, the other service provider who are going to be consumer. They also have to be on board, so that everybody are part of the same infrastructure network. So in order to use that services, that there is a dependency or multi-partner commitment necessity in this whole system, that makes it much more complex, because you can bring it up a solution, but you can't bring up more partner into that. Then it's becoming a challenge again in terms of business to scale it up. Then it goes into the another factor, that because it is so novel technology, a lot of standards are not being defined, and that makes a little more complex in terms of adaptation for the newcomer. That, for example, the DTCC chairman was saying that it is, if it is not standardized, then it will be very difficult to take it forward for a more matured network agent. And we also have a problem with talent, of course, because it's a very technology driven product, and you need a very niche knowledge to drive certain product or technology that is always evolving and always dynamic. Is another aspect is it's not like a Java programming or any latest C programming, or not C programming, any object oriented programming that is you write once and you can run it everywhere. That is not the case with blockchain as of now. So it has a lot of dependency in terms of the adaptation, because each one is kind of closed ecosystem, and it is not portable. Interpretability is a kind of a challenge for them. Most of these solutions right now in the market, and also for institutes like bank, though it looks like his bank is very modern and more technology driven, but they do have a lot of system which is within the bank framework, which is old and obsolete system that holds them back to to leapfrog towards the technology such a futuristic technology like blockchain. These are that are the impediments for them as an industry to adopt. And definitely this argument would hold good to any of the industry, because there are a lot many practices and a system which is way obsolete, but still it is running, because the cost of upgrade is expensive, and people try to run it as last, squeeze it to the last moment to get the benefit. And that mindset has not shifted in for a futurist technology like blockchain. And again, yeah. So you have any questions so far in terms of the challenges?
From my side, I feel like people are barely succeeding at digital transformation, you
Yeah.
know. And so when we think about blockchain, when it's become a multi-entity trust based agreement with a huge investment of talent and platform and lack of talent, then it makes total sense that there's such a low rate of adoption of such a complex technology. Because so far, the most we hear about digital transformation is a number of disasters that everyone's having in digital transformation. So I think the time is yet to come.
Yep.
It's yet to come for something like a distributed ledger solution.
Right.
um, but it's a very interesting time frame, because I don't know when quantum computing in 20 years will become available. Then are people going to be racing to adopt some new way of securing information, which is not breakable? And again, Ganesh is on this call, so maybe there's a comment from him on cybersecurity's involvement in future with the advent of more more compute power. How does that impact us? I was recently looking at Equifax and the big data breach that they had in 2017, and they did not release that to market. They did not patch their systems. Um, they lost 145 million uh, identification records of social security and the rest. So I think would blockchain would blockchain have been a platform to secure personal credit data? Would it be a good solution for something like that, so that you can't insert things onto the blockchain from unauthorized parties and you can roll back, so that identity theft is more challenging? I don't know. It's a very interesting time for personal information and ownership of assets. So I'm just intrigued by this area. That's why I started this fintech group. Me and
Yeah.
my cat started the fintech group.
Indeed, and cat would be understanding a lot. But coming to the point of you really nods to a point, Gaurav, that the privacy of the data in a blockchain. Once the way right now blockchain is designed is, once a content is written in that, it stays forever. So though anonymity you can retain, but the content itself will be there in the chain. It is immutable. So you can't really change it. Now that brings to a problem. People are so in a dark web, they're uploading contents which is offensive and you know uh, unsocial component for the society. It's in fact threat to the society, and it is there then in forever. You can't delete it from there, because it is always an incremental aspect for the blockchain, the nature by nature of the design of the solutions. So that makes a lot of problem, because people individual life changes a lot over the time. What I was 10 years before may not be the same person today, and my preferences has changed. But if you retain all those information, then it makes a question of this world where hyper social network, our lifestyle is going into completely a lot of in the virtual world, and we never know who is going to leverage or misuse those information of once there in the blockchain. And that's also coming as part. The other part of the solution is you can make a amazing product out of that data, because once it's there, you know the pattern, and you can create an algorithm and create a ultra customized solution. You never know. The world is quite complex, and it's very early to um, say anything, because this is such an interesting dynamic technology dealing with a lot of old school problem and with a lot of potential, but it is not yet there to tap it. So it's somewhere in between, and a very interesting twist, I would say. Yeah, but you are right on that aspect.
Cool. Thanks.
So moving ahead, if we are designing a strategy for transformation, what would we look at it in, at least in a 3 to 5 year, because any planning doesn't, long-term planning doesn't sound good. So maybe 3 year itself is a longer one. But the biggest barrier to blockchain adoption in the next 3 to 5 year, what is part of the research survey from the implementation in financial services has come up, is there is huge percent of that is regulation, regulatory uncertainty. Because technology, the problem so far, because we are in 2020, these problems of the old use, meaning old practices, are still there with the regulation. Technology is changing such a fast pace that regulations are not able to keep it up. And the main challenge here is the uncertainty around it. Because today I can make a concept, I can iterate a technology and bring it to the society or to the ecosystem, to a live system in very short period of time. The research, from the research to product, the cycle has shortened a lot. However, the regulation is still a lengthy process. It has not been modernized. So there are a lot many aspects. And when you're talking about financial services and applying blockchain into financial services, it is always much more tricky because of the regulation. There is also the point which you raise, there are multiple, Gaurav raised that multiple parties are there, and their synchronization between them in order to come to a conclusion, in order to apply a solution, is also a challenging, because they don't trust each other. So I can create a product, but my consumer, who is supposed to be my partner, is not really completely buying out that particular product, then you are nowhere in between. You are lost. That's another problem. And network external, you can't really take it a product and scale it across. So you can't really extrapolate, as in how you're doing from traditional other language or other technology. The interpretability is a challenge, because you develop in a particular framework, particular hardware base, and particular algorithm that stick to it. It can't be easily dismantled and taken up outside. And yeah, that leads the cross blockchain technology incompatibility. So we can't really take it to one and plug it in another one. That makes the scalability a kind of concern. Then again, the patent fight, patent war is there, with ongoing multiple parties are trying to copyright the technology, and there are a lot of infringement lawsuits are going on. And audit and compliance is again 4% of the. However, there are a huge amount of people who are believing that trust, the core factor for banking, is and will remain the cause to delay the adaptation. Because when you don't trust with each other and you're not trusting the technology, it is really difficult to scale or think of a business as a whole. And of course, nearly 30% people saying that interpretability is a definitely will remove the barrier. If they can address the problem of interpretability and from the system, that would be a huge factor for the success, because then the adaptation could be much more faster. So if you are designing something, or you are planning on a product, you need to have to pay attention to this aspect, which is your customer's pain point, that their concern, and how you can include them into your solution, so that your customer could be a much more value add for your customer. As it is for any tool, meaning a tool is not a strategy. So blockchain is a tool, but you can't really drive your strategy around the tool. So you need to, meaning the focus should be a problem of your customer, and the problem should be a order winner problem. So if it is not the key driver factor or the key core problem of this business, then investing on a technology at this point of time, which is quite infant, at an early stage, would be a really difficult to get a value proposition. It also has to be, what if the blockchain is for the in the context I was talking about, the legal agreement part. If it is blockchain is not the solution, then what else I could use it? Maybe a distributed ladder, maybe a different distributed operating system, or maybe a distributed network where I can store. Or there are many other applications, or the data structures are coming in which you can leverage it. So then you have to see the cost and value and risk analysis. So
thank you. So if you were to replace a blockchain which is decentralized with something which is centralized, would that be a, like, instead of a clearinghouse, is there some way of replicating a smart contract of transactions in a central place so that, you know, you're actually doing the transaction, the state of the transaction is central, and so there's no need for a distributed ledger, it's more centralized ledger. So an API based connection would provide all the different counterparties, the trading parties, the clearing houses, a state which is the true real state,
yeah,
and therefore logic can flow in a central way. What do you think? I mean,
yeah.
it's just a reversing the logic.
Right. No, that you're true. Meaning you're right, Anwar, because there are many other technologies also there in the system. Meaning as a whole, like you can create, for example, AD, Active Directory. Also, is kind of, it's very old, but they have my experience in Barclays. They used to have two set of Active Directory. So one is for read write, and it has a multi-put node in each region for the employee detail, and one was for the reading. So read used to get updated frequently from the read write servers, but they all hold the same data, and it's kind of a way to reflect the same, or at least the near latest component, the data of the transaction or something like that, and it would be there in the frequently updated to the read layers, where the read layer is much more widely available for many people, and kind of caching mechanism used to retain those data. So that not exactly a substitute to blockchain, but the underlying understanding or the framework or can be mimicable, I would say.
Okay, interesting.
Actually, just to that point, I would like to get your thoughts on recent research that I've been reading about the efficiency of application of blockchain. And I think it's to the point of the earlier example where actually that research went on to say you've been seeing a very limited, actually real life, large scale implementations of our application of blockchain. And the underlying reason for that is because there's actually more efficient ways to do it traditionally. Right. Through a centralized management system, through APIs and open APIs and things like that. Right. And even if you reflect that in the current market and in financial services for that matter, you see a big uptick on things like open banking and things like that. But blockchain plays a very little role, if not any, in all of these initiatives. And I think that falls back to that research about actually there are more efficient ways to do it and still get the outcomes.
Yep, definitely. I agree to that, Ganesh. And in fact, I was showing in the previous slides about the performance and the output throughput complexity of the blockchain is holding it back. But coming to the alternate solution, there and which are cheaper, way cheaper and way simpler in order to right now. I'm not saying that what will be the solution tomorrow or in future, but as of now, right now, there are some alternatives which you can achieve with less expenses. So for it, even less energy consumption for that matter. And that is a key factor. Many people are trying to pivot whether should I go ahead with a complex technology like blockchain, which could be futuristic but not yet ready fully, not yet mature completely, or should I take it as something 3 to 5 year plan and just move ahead with the business as usual and something which is available right now. And that always makes a kind of easier choice because it is short term and there are a lot many unknowns, and business always try to stay away from the unknowns.
So given the state of blockchain right now, where do you see it's a short-term applicability, especially in your 3 to 5 year horizon, where it actually drives value and is justifiable?
Yeah, that's an interesting question, because I was reading some research. They did a voting system in Bangladesh or Pakistan, Pakistan, I believe, and that research was showing the efficiency, because so I would say that let me take a step back. So the area where the data doesn't grow exponentially, relatively constant. Say for example, population or voting population are relatively not so changing too much. So once your voter list are there in the system, that could be a solution. It's retaining a much more secure way, but you can utilize and track that who is already voted and which is not voted. So that can be easily being managed, rather than doing a application to a system like too much of maybe a clearing house, substituting a clearing house with a blockchain. That would be really more complex, or maybe unnecessary as of now with this potential, I would say that. So where the data scale is not exponential and not too huge, and relatively security is required, that could be an application for blockchain as of now, I would say. Anybody else, any thought? Ganesh, you have any thought?
No, thank you. I wanted to get your thoughts, but thank you.
So
my thoughts are it's a struggle to find where blockchain is an efficient solution to a problem. I think in a lot of real world problems that clients and businesses face. So I think that's the underpinning reason and the struggle for why application of blockchain outside of Bitcoin has had very little adoption.
Right, exactly.
But those are my personal thoughts.
No, that's you are absolutely spot on. And in fact, I was showing the statistics that 86% of the executives are thinking blockchain is kind of some activity. However, the execution and implementation is less than 15%. Huge gap and huge constraint, because the underlying issues are not addressed. There are a lot of heaps of issues which has to be addressed, and it's still a way back to, meaning it's a long way to go. So coming back, yeah, that's alternate solution also need to explore. As Ganesh was saying, that what is your plan B? That would be a thinking process if you're trying to think of blockchain as a solution. And again, it's not a, so we started the discussion saying that whether legal agreement, smart contract is the missing link for blockchain, or blockchain is the solution for the legal agreement, smart contract. I would say that legal agreement, yes, it is a critical aspect of the finance, but it is not the order winner. So this is not breaking anything on the margin or finance revenue, that it has to be addressed as a priority. That's why we kind of, our research or analysis on that aspect was, it was not a order winner program. So and the technology is still in an infancy, and it would be too much complicated to apply for a small or the not revenue driven aspect of a business to have a blockchain kind of solution. And again, it's just another way of storing data. So there are a lot many alternate decentralized solutions are there in the market. We can explore around that one, maybe for a short period of time. With it's a great, interesting concept of removing the trust issue and making the trust and the integrity and visibility of the data across the same time and same period is great. However, finding the real business application is still a struggle because of all those underlying issues as we discussed. And again, if you are not really solving the underlying issue for the core blockchain, it's always good to watch closely this technology, have a good grasp of that one development, what is going on, what is the new technology like that Ethereum architecture I was explaining, which is much more efficient than that of Ethereum. And they are addressing a lot of problems, which is with respect to the performance and consumption, on the power consumption, or the cost effectiveness, or the implementation is portability. So that aspect probably we can explore that. As of now, it's as of now, because its real application is very low because of those underlying technical problems, which is still to be solved. So Ganesh, just in case, actually, I want to show you the performance matrix on that architecture was, and these are the problem, like this energy consumption is such a huge that people are a bit skeptical to use blockchain as a kind of full-fledged solution. And in terms of the adaptation, this is the market research saying that only 15% are live, where most of them are under research and development kind of midway. And yeah, it's a kind of a long way to.
Yeah, that's a bit consistent to what I've been hearing. A lot have been, had media around what you call it, launching, but a lot of them never really survived past year one.
Yeah, there are a lot of buzz in the media, but it is the real implementation is a little bit of off the tracks. But this is a nice technology. It is a very interesting technology. It's having a lot of potential, maybe in future. But right now, if somebody is trying to look into this real solution, they have to be aware that it is not yet ready for the consumption kind of, at least. I will share this one, and I have a more detailed research on this topic, and I was working with Professor Angel, supply chain guru in IE. So this part of the part of the project, actually supply chain project in finance, and we are working on this project. I had a more extensive research which I actually shared with Gaurav. Maybe I took in, and I can, if you are interested, I can send you guys. You can have a look. There are much more area covered here. It's just, yeah. You have any thoughts, Vyom, Gaurav, Matthew, Ganesh?
I'm good, man. But thank you so much for sharing your research and taking us through this talk. So from my side, yeah, I think I've learned a few things and seen something interesting, which we all talk. A lot of people talk about blockchain. Ganesha brought up some good points. So thanks a lot for having run this first one of the FinTech series.
Welcome, my pleasure. I was also, it's my first webinar, so I was just also skeptical how to continue. So anyway, all good.
Yep. And
Thank you,
similar thoughts from my side. Thank you so much. It was an interesting presentation. Like this is like my kind of first introduction to blockchain. Before this, I just have a basic understanding. So I was always thinking that if blockchain has so much to offer, why its products have not been developed so far? It's been in market for like more than a decade now.
Yep.
But looking at the problems you just mentioned in the previous slides, like it is not as efficient. So now I can see that means why it has not been mainstream technology even in 10 years. But let's see
Yeah.
means what happens in future.
Yeah, that's interesting, because we also don't know what's gonna happen in the next. Maybe the underlying problems, maybe it will be much less energy consumption, maybe it is efficient much more, and you don't have to worry about the storage. And next future what holds, we don't know. But as of now, it's a bit of challenge if you really want to deep dive. So that's the takeaway from the research, actually, what we found, and that's what holding and also another problem is the regulation is a huge problem. Regulation concerns privacy, and regulation concerns are very uncertain. So yeah, you're right on that.
But I feel that means regulation and all those problems are still there with all the technologies which are there. Like if we talk about artificial intelligence or the data which we are collecting. So technology is, like you said, technology is moving at such a fast pace. Regulators and policymakers cannot move at that pace.
Right. That's
So,
the true. That's true.
yeah, but let's see what future holds for us. Definitely, it's worth keeping an eye. To keep it on our radar, how this technology grows.
Yes, certainly.
Yeah.
Hope it was some information. You might have already know a lot of stuff about it, but yeah, I hope a bit of 2 cents from my side.
It was good. Thank you so much.
Thank you. Thanks for your time. Appreciate.
Thank you.
Thank you, guys.
All right.
Okay.
Thanks a lot. I'm going to
Yeah.
sign off.
Thank you.
Thank
Thank
you.
you.
Bye.
Yep. Bye. Good night.